Hi dear friends, how are you all? Welcome to YouTube channel HR Tutorials India. In this video, we'll discuss how to fill investment declaration or TDS declaration form. What is investment declaration? Before getting into how to fill investment declaration, let us understand what exactly investment declaration is. At the beginning of the financial year, you have to just make an estimate of investment that you intend to make. You don't need to submit actual proofs until the end of the financial year. You can actually invest less or more. The eventual investments don't have to exactly as declared. An investment declaration form is a provisional statement that has the details that you proposed investment and expenses that are income tax deductible. At the end of the financial year, you need to provide supporting investment proofs for these investments that you have specified in the declaration form. Employers ask for this information because they want to calculate your final taxable income after deducting the tax saved through Section 80C investments, house rent allowance, home loan and medical bills, etc. Based on this information, you can cut constant amount of TDS tax deducted source every month. In simple words, every employee in a company during the beginning of the financial year has to fill and submit a investment declaration, which is an estimate of income tax savings which are the exemptions from income tax. This declaration form is an estimated statement and need not submit any actual proofs until the end of the financial year. The declaration form consists of estimations which need not be exactly because it is just an estimation which could be less or more as per the declaration. An investment declaration form is a provisional statement that has the details of the process investments and expenses that are income tax deductible. And at the end of the financial year, it is the responsibility of the employee to submit the supporting documents as proof to the employer for the investment declaration which is made at the starting of the financial year. Employers ask for this information because it will make the employer or the HR to calculate the final taxable income after deducting the tax saved through different sections, that is 80C investments, HRA, home loans, medical bills, etc. And based on this information, the employer deduct the tax, that is tax deduction as source, every month and pay to the income tax department as per the income tax slabs for a specific person as per his or her salary per annum. To calculate TDS, your employer considers declared investments and expenses that are either tax exempted or eligible for tax deductions under the Income Tax Act. You need to submit both IT investment declaration form and investment proofs to your employer. If you do not submit the required investment proofs at the end of the financial year, either because you have actually not invested the money as required, or even though you have invested, you could not upload or submit the proofs to your employer will recalculate tax liability and will adjust the additional tax in the remaining months. As said, the income tax declaration helps the employer to calculate the investments and expenses that are either tax exempted or tax liable are eligible for tax deductions under the Income Tax Act. It is the responsibility of the employee to submit income tax investment declaration form and the investment proofs to the employer. If the employee does not submit the document proofs to the employer by end of the year, either because they have not invested or they have forgot to upload or submit the proofs of the documents to the employer will recalculate the tax liability for that specific employee and adjust the additional tax in the remaining months for that specific year. Still, if you miss submitting your investment declaration form altogether, you can still file your IT returns with the government before the 31st July deadline. You can declare investments in your ITR and claim a refund for the extra tax deducted. However, this will involve a wait for some months for you to be able to get the excess tax deducted back into your bank account. Also, IT refunds are only processed once you file your ITR. There are chances that an employee still miss to submit the investment declaration form altogether along with the document proofs. There is a chance for an employee to file the income tax returns to the government or the income tax department before 31st July, which is the deadline for that specific financial year. They declared investments in the ITR and claim a refund for the extra tax deducted and paid to the income tax department. However, refund claim involve waiting period for few months to get the excess tax deducted back into their respective bank accounts. But the IT refunds are only processed once the ITR is filed. Tax exemptions and limit on salary. Now let us see what are the tax exemptions and limitations on the salary. Section 80C, deduction on investments. The limitation is 1,50,000 per annum. Which includes home loan principal, ETF, life insurance premium, ELSS, tuition fee, and NPS. It also includes fixed income deposits, which consist of Sukanya Samriddhi Yojana until the daughter's age reached to 21 years. PF and VPF, Public Provident Fund and Voluntary Provident Fund, with a period of 15 years. Post Office Deposit and National Savings Certificate. These are the investments or the exemptions under the Section 80C. Interest on home loan under Section 80C and Section 24, and the limitation is up to 2 lakhs. Section 80 TTA, deduction from gross total income for interest on savings bank account, and the limitation is 10,000. Section 80E, deduction for interest on education loan for higher education or higher studies, and has no limit. Section 80EE, deductions on home loan interest for first time home owners, and the limitation is 50,000. Section 80G, differs, deduction for donations towards social causes, and the limitation is 50%. Section 80D, deduction on premium paid for medical insurance, and the limitation is 25,000 for family and extra 25,000 for parents. Section 80DD, deduction for rehabilitation of handicapped dependents relative, and the condition is 40% disabled, deduction allowed is up to 75,000. 80% disabled, deduction allowed is up to 1,25,000. Section 80DDB, deduction for medical expenditure on self or dependent relative. The actual amount paid for medical treatment is up to 40,000. For senior citizens aged between 60 years to 80 years, the limit is 1 lakh. So dear friends, hope you understood what are the different types of tax exemptions and their limitations on salary. Now let us move on to the main topic, how to fill the investment declaration form. How to fill the investment declaration. As we have discussed, every company shares this investment declaration form to each and every employee in the beginning of the financial year, so that as per this declaration form, the HR will assume the initial investment what an employee would like to declare, and accordingly the taxes will be calculated as per the income tax slabs with respect to the salary of each individual employee. Now let us see the theoretical part, what are the different sections will be there in the investment declaration, then we'll see practically how to fill the investment declaration form. This form consists of basic information of an employee where we need to fill the details. We'll fill all the details in an Excel sheet which I'll be showing in some time. Then comes the section 1 which is related to HRA, wherein we need to fill all the rental details with respect to the house rent allowance. Section 2 which comes under the category chapter 6A, which consists of standard deduction, 80D, 80DD, etc. Then comes section 3 which is under section 80C. Then section 4 which is related to 80CCG and 80TTA. Then section 5 under section 24, interest on home loan. Then comes section 6, 80EE, interest on housing loan. Then comes section 7 which is related to the income from dividends and other source of income. Then finally section 8 which is a declaration where we need to fill the details of an employee and sign it. Now let us see how to fill this investment declaration practically in an Excel sheet. So dear friends, hope you understood the theoretical part, how to fill the investment declaration form. Now let us move on to the practical part. In this practical, I have taken an Excel sheet where I have created different sheets for different sections, as I have already explained in the theoretical part. Now let's move on to the first sheet, that is introduction, wherein the company name will be displayed along with this employee code, etc., date of birth, location, contact number, full name of the employee, father's name, gender, PAN card number, joining of the employee with the company. So these are the basic information which need to be filled by each and every employee in the investment declaration form. It varies from company to company, but most of the companies follows this kind of declaration form. Now let's fill the introduction sheet. Employee code, then full name of the employee, then the CTC of the employee. Here I have taken 12 lakhs per annum. Husband's name or father's name, date of birth of the employee, gender of the employee, location, PAN number of the employee, contact number of the employee, then finally the joining date of the employee with the company. So we have filled the minimum information or the introduction information which is required for filling of the investment declaration form for the employee. Now let's move on to the section 1. Only original rent receipts, photocopy of rental agreement will be considered. So this section is related to HRA, which need to be declared by the employee with the company in this investment declaration form. It consists of from date, to date, rent paid per month, city, full address. Below information is mandatory if the rent exceeds more than 1 lakh per annum, which is the PAN number of the landlord and the address of the landlord. Now let's fill all the details with regards to this section 1, that is for HRA. From date, to date, rent paid per month, then city or location, then the address of the employee where he is staying. Here, as the rent is 25,000, which is exceeding more than 1 lakh per annum, the PAN number of the landlord and the address is mandatory. Now we need to fill the PAN number of the landlord. Then comes the address of the landlord. The address of the landlord and the address of the employee is same because the owner stays in the same address. So this is how the section 1 needs to be filled for declaring the investment with regards to HRA. Now let's move on to the section 2. Section 2, photocopies to be attached. Declaration of savings allowed under section 80 of the Act 1961 in respect of saving allowed under chapter 6A. It consists of standard deduction of 50,000. Under section D, medical insurance premium for individual spouse children is 25,000, with parents it's extra 25,000, and if the parents are senior citizens then it will be another 25,000. So club altogether it is a maximum limit of 75,000. Preventive health checkup with a maximum of 5,000 ceiling. Section 80 DD, medical treatment for dependent handicap. If the disability is more than 40% but less than 80%, the limit is 75,000. And if the disability is more than or equal to 80%, then the maximum limit can be considered is 1,25,000 per annum. Then comes 80 DDB, medical treatment for specified disease. That is, if a patient is not a CT citizen, then the maximum limit is 40,000, and if this patient is a senior citizen, then the maximum limit is 1 lakh. Under section 80U, permanent physical disability of assessee, which means if the disability is more than 40% but less than 80%, then the maximum limit will be 75,000, and if the disability is more than or equal to 80%, then the maximum limit is 1,25,000. Then finally comes the section 80E under the section 2, which is payment of interest on loan taken for higher education, and it is for maximum of 8 assessment years, and the interest is fully exempted. Now let us see what are the sections which has been opted by the employee for this financial year under the section 2. Standard deduction is common for everybody, that is 50,000. Medical insurance premium, here the employee opted for 25,000, that is for individual spouse and children only. Preventive health checkup, here it is 0. Medical treatment dependent handicap, it's 0. Then comes medical treatment for specified disease, it is 0. Permanent physical disability of SSC, it is 0. Under section E, interest on loan taken for higher education, it is 0. So dear friends, we have filled the required details under the section 2. Now let's move on to the section 3. Section 3, savings under ATC of the Act 1961, photocopies to be attached. And the total amount of deduction allowed is up to 1,50,000, including the provident fund deducted through the salary, which means the PF which is deducted from employee and employer also includes under the section. Now let us see what all are exempted under the section ATC. Accrued interest on NSC, public provident fund PPF, life insurance scheme, that is LIC, or any other insurance policy for self, spouse and children, NSC, National Savings Certificate purchased, home loan repayment of principal amount, which also includes the residence fee, ULIP, unit linked insurance plan, then mutual funds. Then comes investment under section 80 CCC, pension policy which also qualify under section, and the limit is up to 1 lakh. Children tuition fee, only tuition fee for 2 children only. Term fixed deposit made during the financial year April 22-23 for a period of not less than 5 years with a scheduled bank. Senior citizen savings scheme, ELSS, equity linked savings scheme, bonds issued by National Bank of Agriculture and Rural Development, 5-year post office deposit and senior citizen scheme, then finally the Sukanya Samriddhi account. So these are the different categories which can be exempted under the section ATC. So now let us see what are the exemptions for saving the tax under section ATC. Accrued interest on NSC 0, PPF it's 43,200, LIC it's 30,000, NSC 0, home loan principal payment 40,000, ULIP 0, mutual funds 0, investment under section 80 CCC 0, children tuition fee 36,800, fixed term deposits 0, senior citizen savings scheme 0, ELSS 0, bonds 0, post office 0, Sukanya Samriddhi account 0. So dear friends, these are the exemptions which has been applied by the employee under the section ATC. and when we count all the amounts together, it's coming to 1,50,000 and the ceiling is 1,50,000. So the total amounts what has been declared will be exempted from tax. Now let's move on to the section 4. Section 4, savings under section 80 CCG and 80 TTA. Now let us say what it consists of under this section. Equity savings scheme under section 80 CCG, 50% of the amount invested or 25,000 whichever is less. Deduction IRO, interest savings under section 80 TTA, interest earned from savings bank account up to a limit of 10,000 is exempted. So these are the two options under section 4 which can be exempted from taxes. Now let us see what have been exempted by the employee under the section 4. Equity savings scheme 0, interest earned from savings bank account 0. That's all for this section 4. Now let's move on to section 5. Section 5, deduction under section 24 of the IT Act 1961, interest on home loan. In this section 5, we will be discussing how the interest on housing loan is calculated and what is the amount which is exempted from taxes. With respect of the amount of any interest payable borrowed capital for acquiring construction, renewal, repairing, reconstruction property. Address of the property which has been taken. So we need to fill the address of the property. Then comes status of the property, self-occupied or rented or vacant. So we need to fill whether it is rented or vacant or self-occupied. It is self-occupied. Amount of loan issued, date of loan availed and name of the address of the lender, loan provider. So we need to fill these details. Here the loan amount is 25 lakhs. Purpose of the loan, constructed or acquiring property. So we need to fill these details. So it is under construction. Then comes construction of the property will be completed on or before expected date. So here we need to fill the date by which date the construction will be get completed. It is 1st of May 2022. Date on which construction has completed. So we need to fill the completion of the property construction. Here is the same, that is 1st of May 2022. Date of possession of the property, which means from which date the property will be possessed. It is the same date, that is 1st of May 2022. Proof of possession of the property, builder certificate or registration copy. Here the proof what we need to submit is registration copy. Total amount of interest paid post construction and possession during the financial year April 22-23. So we need to declare the amount of interest which is paid for the construction or the possession of the property, that is 1 lakh. Specify amount of interest paid for pre-construction possession period. It is 0. We need to declare whether the property is self or joint. Here it is sole, which means it's the property of the single person but not the joint property. If the joint ownership, name and relationship of the owners, as it is a sole property, it is not applicable. Share of joint owners, if the property of the joint owner declaration must be submitted, not applicable. Whether any sum constituted by the joint owner in acquiring property, not applicable. Name of the joint owners apart from employee who are repaying aforesaid home loan, not applicable. Whether joint owner are claiming deduction under Income Tax Act 1961 on account of housing loan taken for aforesaid property, not applicable. So dear friends, we have filled the required information for the section 5, that is interest on housing loan. Now let's move on to the section 6. Section 6, deduction under section 80 EE of the IT Act 1961, interest on housing loan. This also declares what is the maximum amount that is with respect to housing loan. With respect to the amount of any interest payable on loan sanctioned during the financial year 2022-23 for the purpose of acquiring property, maximum limit is 2 lakhs, which means the maximum limit for housing loan interest which can be exempted is 2 lakhs. Now let's fill the details. Amount of loan sanctioned. Amount of loan sanctioned is 25 lakhs. Value of the property, it is 35 lakhs. Any property owned by employee at the time of sanction of loan, yes or no? No. Total amount of interest paid during the financial year April 22-23, it's 1 lakh. So dear friends, we have filled the minimum information required under the section 6, that is interest on housing loan. Now let's move on to the section 7. Section 7, other income details to be accounted for tax calculation. These are the details which are optional and extra under the section 7 which can be opted for exempting from taxes. Interest earned from corporate society, post office savings scheme and exceeding 10,000, because up to 10,000 it is tax free. Interest dividends, FDRs, RDA, bonds, etc. Salary from other employer, family pension or income from other sources. So we need to fit all these details. Interest earned from corporate society is 0. Interest or dividend from FDRs, RDs and bonds 0. Salary from other employer 0. Family pension and income from other sources 0. So income from other sources is 0 for this employee. So we have to fill 0. Now we have completed section 7. Now let's move on to the last section, that is section 8. Section 8 is nothing but the declaration, which means we need to declare that all the details which are provided are correct and with the name and signature. We need to fill the name of ourselves. I, Mr. Karanaryan, do hereby declare that the aforesaid said information is true and correct to the best of my information and belief, and I shall indemnify the company against all costs and consequences if any information is later on found to be incorrect. Which means, being an employee, it's responsible of the employee stating that all the information is provided is correct, and if it is anything cost consequences need to be paid extra, then the employer will be responsible for that. Signature of the employee, then comes date, then comes place. We have filled all these details under section 8, and we have filled all the 8 sections and completed the investment declaration form. So dear friends, hope you understood how to fill the investment declaration form, both theoretical as well as practically. If you have any queries or questions related to this video, please do comment in the comment section. I'll be happy enough to answer all your queries. And if you like this video, please do subscribe and share among your friends. Thank you very much for watching this video. Have a nice day.